There are a million voices online trying to convince you that their investment strategy is the best and most reliable. This can quickly become overwhelming. It's difficult to know when someone is legitimate, knowledgeable, and actually trying to give you advice instead of trying to turn you into a follower. Michael Saylor is one such voice that has covered all these bases. This massively successful MIT grad and tech company CEO went from publicly denying Bitcoin's value on Twitter to converting his company's cash reserves entirely into crypto. So stick around, because after we break down Michael Saylor's Bitcoin theory, we'll provide a rundown on how you can begin adding to your Bitcoin holdings and maximize your return on investment based on his knowledge. Hey everybody, and welcome to Profit Protection, your go-to source to stay up to date on what the thought leaders in crypto, fintech, and digital asset markets are doing. First off, let's do a quick recap on why Bitcoin is now a household term. Bitcoin has become a wildly popular investment among regular people and institutions alike. While there is still a long way to go before we see widespread adoption, it has already grown to unimaginable heights. From mere cents to tens of thousands of dollars per coin, the cryptocurrency truly threw a wrench in the traditional monetary system. Despite the volatility that we have seen in the past year or two, it continues to attract more and more investors. If you watched our previous video on Cathie Wood and her ARK Invest Report, you'll know that the monthly settlement volume of Bitcoin has already surpassed the monthly payment volumes of Visa. The cryptocurrency is undoubtedly gaining momentum. This is due to many factors. People are losing faith in the dollar and its security for holding wealth. Trust in the government, particularly the Federal Reserve, seems to be at an all-time low. Inflation has been running rampant, and people are waking up to the fact that their money might not be safe sitting wherever it currently is. Michael Saylor is a voice of reason, preaching the importance of Bitcoin. He's put his money where his mouth is. Not only has Saylor invested personally in Bitcoin, but he has transferred the majority of his company's cash reserves into the crypto as CEO. So what gives him the confidence to take such a risk with a publicly traded company? Stick around, because we're going to break down Saylor's story and strategy so you can take a new look at your own investment theories. Alright, so who is Michael Saylor and why should I listen to him about crypto? Michael Saylor has survived in his position as CEO of MicroStrategy throughout the dot-com crash, the 2008 financial crisis, and many ups and downs throughout the life of his company. When Michael Saylor started MicroStrategy, it was a business intelligence service company. He now prefers to call it a technology company, specifically because technology companies constantly grow under pressure to deliver up-to-date services. His thesis behind company-wide decisions is to take risks and evolve to stay competitive and relevant. This is a principle that extends further than pure policy changes. It puts MicroStrategy on the map. In the fourth quarter of 2021, Michael Saylor deemed Bitcoin as the best hedge against inflation and other economic forces when he moved all of the company's cash reserves into the cryptocurrency. Since then, it has continued to add more Bitcoins to its reserves. This made MicroStrategy the largest publicly traded holder of Bitcoin, putting it into the limelight at the height of the most recent crypto buzz. Now, this is exciting and all, but what exactly is Saylor's strategy here? Michael Saylor has not been shy about explaining his theories surrounding cryptocurrency. This is partly to soften shareholder uneasiness as well as to spread awareness of the opportunity to invest alongside him. This has given him a major voice within the investment space, and his first-hand involvement gives him even further credibility. Saylor does often say that you should invest in MicroStrategy stock because of their Bitcoin reserves and business strategy, but that's not all. He also strongly pushes the idea of individual investors buying their own cryptocurrency. This is because he believes that is the best vehicle for storing your money in the long term. Let's break down three main points that Saylor often refers to when talking about Bitcoin. Number 1, cash is trash. Cash is losing value due to inflation and the nature of the currency. Current methods of propping up the economy, like lowering interest rates and printing money, are not sustainable fixes. It has always been the case that the smartest move is looking for better currencies to hold your wealth in. In the past, for example, converting all your pesos to dollars was a smart move. It may have been a murky picture, but the factors affecting these currencies were visible. Those looking for more effective places to keep their money would have seen the inflationary forces pressuring the peso and the lesser forces working on the dollar. If you look close enough, you will see similar forces holding back traditional currencies and the opposite pushing crypto upwards. Number 2. Crypto is king. One of the biggest reasons that Michael Saylor preaches the beauty of Bitcoin is its effectiveness as an asset. Let's compare the cryptocurrency to a few different things that you can invest in the long term. Gold, for example, is incredibly hard to transfer from one place to another. On top of this, the miners have the ability to artificially increase or decrease demand. Real estate, another example, is tied to a physical location and subject to ever-changing laws. If the laws are about to change, there's nothing you can do about it in time to protect the wealth you have tied up in it. Stock in a company is easy to liquidate, but it is subject to many factors that affect the price. Corporate policy, national law, and management decisions can all steer a stock's value too quickly to depend on over decades. While there is certainly more nuance to each of these assets, the underlying principles govern their long-term security. Third, and lastly, Bitcoin is the best performing asset over the past decade. At first, this sounds like another buzzword phrase that is touted by every influencer on your feed. The reality is that Bitcoin has performed incredibly well over this past decade on the exact same principle that will carry it higher across decades to come. It is built differently from other assets. Many people are afraid of the short-term volatility of Bitcoin. This is a valid concern if you are concerned with the value of your money over the next year or two. If you are trying to set yourself up for the long term, the bumpy ride and volatility along the way will seem insignificant compared to the fruit it bears in the end. The difference between this digital asset compared to other physical assets lends itself towards security far into the future. Now that we can see the usefulness of Bitcoin as an investment, what can you do yourself to capitalize on this opportunity? In an interview with Tom Bilyeu, Michael Saylor put it simply: it's very rare that you find a technology that's the solution to every rich person's problem and every poor person's problem simultaneously. The nature of cryptocurrency, particularly Bitcoin, reveals the best opportunity we have ever seen in financial history for storing wealth. Whether you call yourself rich or poor, the same principles apply. Using Bitcoin as a hedge against inflation and a place to store money is something that benefits anyone who lives in our economy. If you've been following, you'll understand that an investment strategy involving Bitcoin should be made with the far future in mind. Michael Saylor's theory on this is very clear. Here are 5 important things to remember for utilizing Bitcoin for your own financial gain. First, you need to choose the strongest asset for your time frame and reason for investing. Once you know that, you need to stick to it. Are you trying to save money today for next year? If so, Bitcoin may not be ideal. Are you trying to store your wealth until retirement and for your children? You need an asset protected from outside risks, like changing laws and uncontrolled inflation. Judging by the various factors we described, Bitcoin is likely your best bet. Second, choose your crypto wisely. There are certainly reasons why you should be interested in the development of alternate coins like Ethereum and others. There are a lot of exciting developments in the crypto space, and there are many blockchain currencies that have attractive features and aspects for investors. This is why you need to know the reason you are choosing Bitcoin. Michael Saylor is rooting for Bitcoin over other coins because the coin itself will never be subject to changes that are integral to how you can use it. The foundation is simple and set in stone. There is no governing body or owner. Thirdly, know how you are going to use and store your Bitcoin. There are a myriad of institutions that can hold and secure your crypto. You can use many different methods of sending Bitcoin depending on your platform. If you decide to transfer money into crypto, you need to know how to keep custody of your coins. This will require further research on your part, but you need to feel confident that whatever exchange you buy Bitcoin with will hold it securely. Make sure that you are buying actual crypto and not just a stake in their crypto reserve. If you opt for a physical wallet, compare multiple brands to find the one suited for your needs. Fourth, know your risk tolerance. Even Saylor is quoted as saying, "Before you put your weight on something, you need to be pretty sure." By his standards, as an investor and businessman, a protocol that is unchanging is still risky. If it has gone 36 months without changing and nothing has changed, it's still foreign territory in his book. Compare this to Bitcoin, which has now gone unchanged in terms of protocol for over 10 years. While it is still risky and new, now he as an institutional investor is willing to stake his own weight upon it. His risk tolerance is high enough to handle the wild, short-term volatility in the name of long-term gains. Fifth, continue to stay educated. As with any other financial asset, there are outside factors constantly changing that can affect your decisions regarding investing. While it's important to be well-read in finance and crypto before buying in, your due diligence doesn't end there. It's necessary to stay up to date on the most important conversations regarding Bitcoin and cryptocurrency policies. This is the reason we started Profit Protection. This channel is your best bet for the most relevant ideas and conversations from the world of crypto, fintech, and digital assets markets. People like Michael Saylor are dropping gems for us to utilize in our own investment strategies. We hope to bring you the most vital information from around the web to help you maximize your gains and create a better financial future. If you enjoyed this video, please hit the like button to show your appreciation for our efforts, and consider subscribing to Profit Protection. Happy researching, invest safe, and invest smart. We'll see you on the other side. Take care.